Hello traders, welcome to this live intraday strategy webinar. Today is Tuesday, July 19th. Good to be with you guys this morning. We did just get the release of housing starts and building permits here in the United States. Here's what it looked like. Much stronger than expected print, 4.8% build for the month of June. Expectations were just 0.2. You did get a downward revision to the previous month, but offset obviously by that stronger than expected print for June. Building permits also surpassing expectations of the print of 1.5%. Again, slight downward revision, topping estimates. You're seeing some positive dollar reaction here. Obviously, the dollar made a breakout yesterday, or today rather, an overnight trade. We'll look at that in a moment. We'll take a look at the Euro Aussie and Sterling CAD setups from last night's update. We also want to keep track of Aussie, Kiwi, and Sterling. The UK data, obviously an overnight trade, came out much stronger than expected as far as UK CPI. And you did see the sterling still take a spill to the downside, although we are looking for long exposure from the swing side of things for the pound. Euro CAD, Aussie Kiwi, also just want to touch upon very quickly. Anything I didn't mention, guys, are key pairs that you want to review, or if you have any trades that are open, do feel free to throw them on the message board. All right, let's jump right in. Eileen, great to see you as well. Happy Wild Tuesday. Graham, great to see you, man. Mark, Mir, Mike, Pooja, Ruth. It's good to be with you guys this morning. So let's jump right in. Before we do, here's what relative performance looks like on the greenback heading into the U.S. session. You do have a dollar that's strong against all its major counterparts. Biggest loser, Aussie dollar, down 1.36%. Now, as I said before, Aussie's coming into a major support barrier and the level of which I would like to perceive as the near-term bullish invalidation. So we'll see if we can't see a hold there for support heading into U.S. trade. Kiwi dollar also down 1.19, also coming into an interesting area of support. The initial support targets have already been taken out, but still downside bias is favored. Japanese yen, smallest mover on the session, down just 0.18%. Okay, and I guess while we're at it, taking a quick look at the equity board, you are seeing a turnover in broader equity bourses over in Europe. FTSE 100 down 0.17%. DAX, biggest loser on the session, down 1% so far in this ahead of the U.S. Open. U.S. equity futures also poised to open slightly lower on the session, about 4 handles on Dow. S&P about 5 handles to the downside. Okay, so dollar index. Here's what it looks like on the daily. This is the chart that we've been following, if you recall, for the last couple of weeks. So that forsaken range that held for so many days, so many weeks here, finally giving out the breach, taking you through 12,064. We noted yesterday that we were looking essentially for a clearing of this range, 11,965 into 12,064. Here's the break, and we're now at initial resistance again. Real quick, if you take a zoom back here, remember this formation, guys, basic channel support, taken in parallel from that high that you made in July of 2013, offered support, break, here we are right back as resistance. Okay, we literally just coming into it now. Major critical resistance on a topside breach here is the 2016 open that takes you to 12,131 and coincides very nicely with the 50 line here of the operative structure off the lows. So that's sort of your next breakout target, but immediately heading into the U.S. session, you are coming up against structural resistance. Also keep in mind one thing, today's close will be important from a momentum standpoint. This will be the first concrete, I want to say, breach and close above 60 if we get it today that we've seen since obviously the tail end of the Brexit rally. So we'll have to see if today's close is able to keep momentum above 60. If we do get that close, guys, keeps the focus really still on the upside here for the dollar index rather. I'm still of the mindset that you find some sort of peak here near term. So I'm not really looking to take long exposure from here, but certainly we'll be looking for exhaustion, specifically if we hold below this trend line here on a close basis for U.S. trade today. Here's what it looks like on the 30-minute. And this is about a clear initial weekly opening range break that you get. So here's your weekly open. You set a range for the first day. There's the break that you saw yesterday in Asia trade. Keeps you constructive against the lows, looking for a late week high, rallying off to the races here, checking near-term structural resistance. Any questions on the dollar index before we move off? Just a quick recap there. Again, just as a gauge for what the base dollar move is doing here. Obviously, strength across the board, so it shouldn't be too hard to ascertain. But we'll continue to look for near-term exhaustion here on this advance. Okay, now let's jump into yesterday's updates, into the nitty-gritty of the scalp report. So we had the Euro-Oz setup, panned out pretty nice. It was hard to catch an entry, guys. I tried to give you this as early as possible before, basically before this thing really started to rip. We were just starting to peak above a near-term consolidation pattern. We've actually, as far as this is concerned, the bounce and break was actually pretty clean. So here's what we looked like last night, and we were talking about this consolidation pattern, a measured move. And when you're talking about measured moves, just for those of you who might be new to this, your basic technical analysis, you look for the breadth or the width of the formation to inevitably give you the stretch higher. So that means a 100% extension of this range of the consolidation pattern puts it right here, 147.44. Okay, that's this range extrapolated off this high. And that gives you 147.44. You had a basic 236 retracement at 147.55, peaked right above that before pulling back. So again, for me, the consolidation breakout trade is done here. Now this is a wider range ATR. So again, the volatility that we've seen on that surge into 47.55, I would kind of cap that today. But the breakout trade that was on the association of this consolidation formation, that's been resolved here in this rally into 47.44. So Mike, where do we go from here? Good question. I just want to point out a couple of things. So if we take a zoom out, basic channel support. If we take a basic trend line support off the two lows here, extrapolate that to the high. Okay, not necessarily that stretch high, but the high here. You see where it coincides? Basically caps the advance that we made in overnight trade. If you take another parallel, and I haven't done this yet, just want to see if we get anything interesting. Pretty decent touches. Support, 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 resistance, breakout. Okay? Basically suggests that we're testing the upper ends or the upper end of the range for the descending formation that we've been in. So for me, long exposure at this point, you want to be very cautious. I do think you move higher, but near term, you want to look for a little bit more of a setback. Here's what the daily looks like, by the way. The premise of the trade, and one of the things that we were looking at and highlighted last night, was the fact that this thing was coming off of a basic trendline support. Nothing too fancy. Right off the December low, tagged again in April of this year. We sat on it for the first part of the month. Okay, you had some very nice convincing bullish divergence as price action made a lower low. The oscillator made a higher low. So you're inevitably looking for the breakout. Here we are, initial first topside targets already taken out. So from here, looking for a pullback, and the topside is at risk immediately, but I think you would look to use that pullback to get back on the long side here for Euro-Oz. And right now at this point, a quick retracement off the low. Bring up that 236. We can get rid of that high. Get rid of that 100. Boom. These are the new levels we'll be looking at for Euro-Oz moving forward. Okay? One other thing. And you want to put your bullish invalidation level near term right around here. I'm sorry. It'd have to be down here. Just above that swing high from midweek last week, 50% retracement, trendline support. That would be your near-term bullish invalidation, but essentially you're looking for a pullback into one of these levels, inevitably to get back on the long side of the trade, looking for the breakout. If we clear these highs, the levels are pretty clear as far as topside objectives. 47.97 represents just a swing low in price action. More importantly, like I said, the monthly open and the 2016 open gives you 49 handle basically into 49.13, this region right up here. Okay, so the levels are pretty clear. Again, if you need to take a quick snapshot of this, don't forget you got that camera button in the top right-hand corner of your screen. Go ahead and click on that if you need to reference this later in the day. But basically coming into some near-term support, long side is vulnerable for more of a kickback here, constructive above 46.27, inevitably looking for that break higher to get you back towards the yearly and monthly opens. ECB is on tap on Thursday. Don't forget, it's the major market mover for all the euro crosses. I'm sure Draghi will have some commentary on the back of everything that's going on that'll shake things up. So for any positions that you're putting on for a longer term duration, just keep that in mind heading into Thursday. You are heading into some pretty severe euro event risk. Any questions on Euro Oz? Still my favorite play from all the ones that we went over last night. And like I said, since the release of the update, it was kind of hard to try to jump into this just because it was already starting to rip. But the pullback, finding support right at former triangle resistance was really the tell. Okay, so that popped back higher. Momentum got you some divergence into those highs. A trigger break leaves this thing vulnerable near term for a pullback. You look to reassert the long side in Euro Oz. Okay, Euro Oz at initial resistance, got that. Okay, next up on tap is British Pound versus CAD. Here's what that looked like. And again, start off with the daily chart here. Very simple, nothing too fancy. Typically my favorite plays, guys, and the best plays that we have are the ones that are just basic setups and price. And here's, before we get started on the scalp, here's what Sterling CAD looked like on the daily chart. Again, a pair that was coming off of basic structural support, namely just a trend line here extending off the lows from October of last year, and a consolidation pattern after the rebound. So here's your Brexit drop-off. You made a new low. Price action popped right back into the monthly open, which is right here at 71.94, and now we're just in consolidation. So the play here is not necessarily, well, let me take a step back. From a scalping standpoint, we can scalp the inside of this formation, no problem. I say that, for example, as here there was a short trigger and overnight, get you a downside bias. Right now you'd be looking for a drop towards the weekly open, more so importantly, just basic triangle support. But basically, this is the resolution that you're looking for. I do favor a topside break inevitably for Pound CAD. I think that's sort of the game plan here moving forward. But near term, the focus is on this consolidation pattern. The levels are pretty clear. You have your, like I said, the weekly open down here at 70.65. You have resistance at the monthly open. We checked that yesterday. That's right here at 72, essentially, 71.97. And then the July close high. So the close high that we made would necessitate a break above 72.70, and that's where we'd start to look for a more prominent breakout of consolidation formation here. Just to put things in perspective, if we do the same type of measurement that we just did on Euro Oz with regards to the triangle breakout here, just to give you a picture of potential here. What am I doing wrong? Oh, I didn't select it. Sorry about that. There we go. So if we do that, a measured move takes into 78.40, all the way up here. Okay? Just zoom that out real quick so you can get a better idea. So just to give you a picture of where the focus would be, or where the rally would take you on a measured move of this consolidation, just from a technical standpoint, if you do get the topside breach, you're looking for quite a substantial push towards 78.40. That being said, you're coming in some near-term support. You're on the lookout for some support here. Long triggers heading into U.S. trade. This is the pound, guys, and I always just joke around with you guys and tell you pound price action is, oftentimes sporadic, unpredictable. You get a lot of throwovers of resistance, a lot of false breaks of support. That being said, I would be very weary of a sort of a quick drop here. I'm not really interested in playing the short side, even if you get the break. I'm interested in long triggers, long entries. So if this breaks, not going to chase the downside. I'd be looking for a drop towards that key 618. It still might need to fulfill the 618 before we move higher. I don't know. But at the end of the day, the broader story here for me, near term, still remains rather constructive on pound CAD. Any questions on the loonie? Keep in mind, for the pound, you do get some data, for the CAD, you do get some data later this week. Here's what the economic docket looks like moving towards the latter part of the week. You do get CPI numbers on the 22nd. That's going to be the major market reader for CAD data this week. So for all the CAD crosses, do keep that in mind. Sort of inflation week for the markets, as it were, so far. And obviously, we don't want to forget, as far as the UK is concerned, you still do have a barrage of data this week as well. Tomorrow you get the claimant count and the unemployment numbers for the 3-month ILO, expected to hold at 5%. You also do get retail sales heading into the end of the week. And again, for the month of June, we are looking for slight downtick in a lot of the retail sales figures from the UK. So ain't over yet as far as event risk is concerned. For sterling triggers, because of the throwovers and other, what kind of triggers do you watch for? It's still the same, Eileen. It's still the same in price action. The only thing I just want to say is you want to open up your stops a little bit and be a little bit more. Let me take that back. You know what I'm trying to say is this, Eileen. With the sterling, there's a lot of head fakes. That's what I'm trying to say. So even though this is technically our bullish invalidation and we want to see price stand here, on a 30-minute candle that kind of rips through this, I'm not going to start looking for short triggers just yet. For me to validate that, I would need a rally back up into that former trendline support as resistance. Then we would start to look for short triggers. For me, this thing could easily just surge right through that bottom and then quickly recover and then find support here again. That's where I would look to reestablish a long position. Eileen, does that make sense, sort of the thought process behind it? So you wait for long price action too. Yes. I mean, ideally, this thing comes into this level right here, Eileen, then you get a long trigger and momentum. Let me bring up hold on one sec. Let me bring up the 5-minute and the 1-minute. We'll see if there's anything sort of forthcoming here. I see your question. Okay, let's see what we're working with. So 1-minute momentum is starting to hold above 40. That's looking a little encouraging. You don't have anything too convincing here on the 5-minute just yet. So that would be a decent long trigger I'd be looking at, save for the fact that there's no divergence into the lows and we're not really at support just yet. So if this was a trigger I'd be interested in if price action was indeed already at support. But you still have another 90 pips possible to the downside. Remember, the pair that we're dealing with here has a much larger ATR. So I'd be waiting for a little bit more of a drop towards support to look for some long triggers on the rebound. What I'm saying to you is if it breaks this region on an intraday basis, sit back, don't touch it. You'd look for the rebound to either find resistance here, in which case on the move lower you'd start to re-enter on the short, or it could recover right back through. And in that case, on a pullback, I want to find support again here. My point being is that this is going to be the critical area so far near term for the pound CAD heading into the U.S. Open. But for the throw over, then pass support, could miss the trigger. That's always a possibility, Eileen. We're not going to get each one, right? You could easily miss those triggers. It's the pound. I wouldn't put it past this thing to, rip right through the lows and quickly run. But the idea and the sort of intraday bias is still looking for pound weakness. Make sense? To buy, right? Pound weakness to buy. Looking for an entry on the long side. Right on, Eileen. All right. Mir says, back to Euro Aussie. Sure, I can do that for you. Here's Euro Aussie. Were we given a tweet when Euro Aussie broke resistance when you're in the trade? Do you figure that it's a good idea to place a stop order to buy it when resistance breaks? And if so, where would you have placed the stop loss? Really good question, Mir. So, a couple things. We don't give out intraday trade recommendations. So for me, Mir, I'm highlighting the levels for you. I'm giving you all the biases and the invalidation level. But on a trade-to-trade basis, for an intraday scalping strategy, there's no one out there that's going to give you, trade-to-trade intraday. I'd be watching, it'd be a fool's errand. And 9 times out of 10, I'm very mindful of the fact that that would lead to a lot of chasing. And that's the problem with me trying to give out, intraday scalping trades on an intraday basis. By the time the message gets to the client base, a lot of the move is already materializing. You're going to start chasing the move as such. So the prompt came out for Euro Aus just as we were breaking that channel triangle resistance, and came back and tested it as support. As far as trying to put a stop order to buy a breakout, Mir, if you're sitting, and I'm very cautious on how I say this to you right now, if you're sitting in front of the computer, you're trading, a live event news break or something like that, you can make money doing that, okay? I've done it myself. I'm telling you that from experience. But it's not a good habit to fall into. You're never going to really do, let me take a step back. You're not going to do well. You're be doing yourself a disservice, Mir, by focusing on trying to buy a breakout or sell a breakdown. You're always better off selling into resistance and buying into support. If you can't get those entries, you look for the next opportunity. If you miss and you get a break of resistance, the pullback and check of former resistance as support is where the entry would be, and so forth. So for this trade right here, you can play this a couple of different ways. We're looking for a little bit more of a correction to get back on the long side. Near term, if this thing rallies back here and starts to fail in U.S. trade, might be a decent short opportunity towards the lower targets here, basic trendline support. If you don't get that opportunity for the rally to take a stop against the high, and this thing just continues to drop, we're nothing. We're sitting on our hands, looking for support lower down, and then we'd start to look for some long triggers near support. Okay? But setting an order to buy a breakout, it just, in my humble opinion, and Mir, it goes to the second part of your question. If so, where would the stop be placed? That's the problem. If I buy a breakout and I'm taking a long position at the weekly high, oof, I don't know where you'd put your stop. Against the session low would just be sort of an initial area, but even that at this point is going to stretch you, almost 100 pips. So just keep that in mind. If you're quick on the draw and you're someone who's very comfortable trading intraday like I am, or you've been doing this for years, yeah, sometimes on a news break, sometimes on a major resistance breach, if the market just gives out, it's like a corkscrew, it's like a pop, right? You can possibly catch a nice little runner. But on average, on whole, it's not necessarily the best idea to place a stop entry order above resistance. Does that make sense, Mir? Does that help? Yeah, you're more than welcome, man. Good question. I get that a lot, actually. Okay, so any questions on last night's updates, either on Sterling CAD or Euro Aus? Again, Euro Aus still favoring the long side, looking immediately lower for a pullback to get back on the long. Pound CAD still hasn't broken. We'll be looking for this consolidation pattern over the next couple of days to finally give way. All right, moving right along into the dollar crosses. Here's the meaty stuff. So last night's radar charts, I kind of just took a quick gander right back at all the setups we had followed from the Sunday update. Obviously, let's just take this from the top. Aussie dollar now coming in some near-term support. I am on the lookout here. Right around 74.90. It looks like we're peaking below it now. There's a little soft target here at 74.70, but you're basically tempting a much larger move here in the Aussie. And this is why, for me, the Euro-Aus long looks a little bit more appealing, especially if you're trying to play an Aussie dollar long. That'd be a good way to sort of offset some of the losses there if the Aussie continue to move lower. But to take this back to the daily chart, I don't think there's really much, what's the right word, discrepancy here with what we've been following. If you guys were with me yesterday on the webinar on Daily FX, we talked about the fact and the significance of outside day key reversals off of resistance and how it's very different when the market makes an outside day reversal from where it makes it. Right? You can see outside day reversals on near-term price action. You can see outside day reversals on hourly, 4-hour. But the fact when the daily chart makes an outside day reversal off of a key confluence resistance, namely the 100% extension off the low, median line off of last year's low, the highs that we made for last month, all stacked up right here at 76.44. Then you made a key outside day reversal on Friday right off that region. Okay, so here's the break. The major support and the near-term bullish invalidation was right here. We're kind of making our way below, now testing the 100-day moving average, which has offered some pretty decent pivots in price. I don't want to get crazy about it, but it's something to pay attention to, and specifically when price action's approaching it as support or resistance. So momentum also looking like it's making a momentum resistance or support trigger break here today. Watch the close. This is important because price action made a decent divergent signal right ahead of it. Right? So price action, bring it into a close to be able to visualize this better. Price action making a higher high. The oscillator making a lower high into a support trigger break. That's bearish. Okay, that's bearish. Now, for me, I was looking, and you might have seen Jamie just tweet it not too long ago, 2 equal legs down puts us basically at support right here. Here's what he's talking about. There's a 100% extension. So 2 equal legs down off the high screams correction if we would have found some support here, and you'd be looking to initiate some long scalps. I don't think that's necessarily out of the realm of possibility still. Okay, momentum hasn't really continued to break down. We are in oversold territory, so that means the market does have the propensity to keep going. You don't want to fade this just yet. But certainly on a pop back above 30, on a recovery back above the 75 handle, I'd be looking for the support to give us a little bit more of a stringent hold. Near term, okay? The broader bias still has to stay bearish, essentially below 75.70. Initial weekly opening range low, nice pivot in price. As you get deeper in time here towards the latter part of the week, you start to run to former channel support, now resistance. But the levels remain unchanged. Again, the risk does remain for a little bit more of a pullback or a drop lower if we continue to hold below that 74.90. Just to put it out there, guys, I don't have any open exposure on the Aussie, but I am looking still for sort of a long hold or a long entry, let's say, around these levels. Don't know if we get it quite yet, but this is sort of the last-ditch effort. If you recall from last night's update, that's still the bullish invalidation level. So technically, if we push lower or even if we hold here, no longer want to be looking necessarily try to fight it. But now that we've cleared the formation, cleared 38.2, specifically if we can't hold this 100% extension, it does suggest that you have a lot more downside to go for the Aus. Questions on Aussie dollar? By the way, downside target 74.69. 74.70. Like I said, that's just a soft target. The major next level of support you'd look for is right here. You got the monthly open. Okay, that comes in at 74.50. Then you have the key 618 retracement of the entire advance off of the lows post-Brexit, and that takes you to 74.46. Questions on Aussie. Now testing bullish invalidation level. Again, watch this 74.90, 74.86 region. All right. Next up on tap is Kiwi dollar. Here's what Kiwi looks like from last night's update. Again, you had Wheeler coming out with some interesting commentary. Last night, specifically from the RB&Z, you saw comments with regards to progressing work on possible debt-to-income ratios. One of the major takeaways was to do with the risk of house price correction increasing across New Zealand. And certainly you saw him starting to talk down the Kiwi dollar, which obviously plummeted yesterday right off the side of seemingly off the side of the planet. Here's what Kiwi dollar looks like now. And here's what it looked like on the daily. And here's what we looked like last night. So I guess let me just bring the 30-minute up. So levels unchanged from earlier in the week. You want to stay bearish below the weekly and monthly open. That gives you this basic range right here, 71.30 to 71.39. That's still going to be the bearish invalidation level, guys. Nothing has changed. We took out targets at 70.45 and 70.10. Those were on Sunday's update. Next downside target is down here, and when that's 69.70. And that coincides on the lower parallel basically into tomorrow's trade session towards the end of U.S. trade. So I wouldn't be surprised to see a little bit of a recovery here, but long story short, Kiwi dollar does look a little exhausted on the short side, and I wouldn't be wanting to chase it from here per se. Again, that's a pretty precipitous 5-day straight decline at this point. So could be a rebound back up towards 70.60, the initial weekly opening range low, before we turn over, but broadly speaking, looking lower towards that move into 69.70. Pretty clean. Pretty clean. Of course, I didn't see those comments coming from Wheeler really affecting the market in such a dramatic and fast-paced manner. But even the momentum signature on that move was still very convincing. Okay, even on the near-term subsequent rally that we saw after that initial spill early in the week, momentum failing ahead of 60, failing ahead of 60, failing ahead of 60. Near term, you actually had a very decent slope here for a trendline support trigger and momentum. Boom. And here we are right back into initial support. Look for resistance near 70.60. Inevitably looking for a drop into 69.70. And again, on the daily chart, you can see 69.70. Very basic 50% retracement, but a decent pivot in price. That was the post-Brexit low right there. And that is Kiwi dollar. Any questions on Kiwi? All right, last but not least, the British pound. Here's what, excuse me, sterling looked like yesterday, and it looks like we're making a compromise of this ascending channel formation. So the swing trades are still looking for the constructive move here. I do think that you do get some kickback still for the sterling. Here's what it looks like from last night. So we were holding a very clean ascending median line formation. I also highlighted this on Daily FX. Essentially, while within this formation heading into CPI, you really can't get too bearish. Now, CPI came out. It was much stronger than expected. A lot of people attribute that to, or let me take a step back, weakness in the pound should stoke inflation. So the fact that inflation came out stronger than expected wasn't really enough to say, you know what, it's really because of increased economic activity and the recovery starting to gather pace in the UK. A lot of people just dismissed it based on the fact that you're seeing such extreme pound weakness possibly fueling the inflation story. That being said, here's what it looks like on the 30-minute. Okay, so you got that downside break last night. Kind of checked it as resistance, not really. And I wanted to see support hold here to maintain a bullish or constructive outlook. If you recall, our bullish invalidation that we noted was still 30.90. So even if we get a drop into 30.90, still possibly look on the lookout for long triggers. Remember, if this was going to be a more severe breakout, you expect to see a little bit more of a precipitous drop here. The break wasn't quite as convincing when I was looking at it this morning, but largely speaking, I am looking for this thing to gather some pace of support for some possible long entries. A basic extension off the high highlights a couple of different things. All right, near-term support confluence right there. Basic 618 extension off the high, a basic 618 retracement off the low. Very nice confluence, just lower from where we are right now. And again, further highlights why we put this as our bearish invalidation level yesterday. I didn't know that this was going to be a concerted high, so I didn't want to leave that extension on there. But now that we've made the break of the low, you can use that high as an extension, and it highlights, again, key support, near-term bullish invalidation near 30.90. So we'll see if we can't find some support here for the pound. If we break 30.90, by the way, subsequent targets are 30.55. That's just a soft target. But more importantly, you'd be looking for the 130 handle and 129.65. So these are your subsequent downside on a break here. But looking for some more stringent support near 130.90. Any questions on the British pound? Again, remember, you have claimant count and unemployment numbers tomorrow morning, and then heading into Thursday, right ahead of the ECB, you do get those retail sales numbers for the month of June. Sterling SSI is very extreme long crowd right now. So good observation. Let's bring that up. Okay. So here is what SSI looks like. Oh, that's pound CAD. Okay, so here's what SSI looks like. First of all, a couple of different observations that I would make on the SSI daily chart is, 1.5 is a decent read. Typically anything above 1.5 or below negative 1.5 is really what you want to stress. Anything in between is sort of noise, so you don't want to put too much emphasis on it. There's just not enough. But I was writing about this yesterday. I was looking at the SSI metrics. A couple of things to take note. A, you've been seeing the long side of the trade start to wane, okay, on increasing open exposure. What that tells me is that there is more trades being put on the pound, but they're being put on the short side. So you're getting more open interest coming into the market, but the short side interest is really what's overwhelming it, bringing the ratio down. So for me, a reduction of long exposure in and of itself is near-term bullish. Okay, and I don't think you can deny that. In fact, if you look at the spike high that you made where traders were most long, right post-Brexit, as traders start to get less long or more open exposure start to build on the short side, that pullback from net long is what gave us the long rally. Now, if you were just a novice and you were looking at SSI from a blind standpoint of just if traders are net long, we want to be short, and if traders are net short, we want to be long, well, then on this entire rally from 128 up into 134, which is a good chunk of change, you would have been trying to short it because traders have been net long, right? So it's important to keep these things in mind. And for me, it's not just where the SSI standing is, guys. That's sort of the quickest way for SSI to mislead you in the wrong direction. It's which direction is the SSI ratio moving. And certainly even if it's a net long, but you're seeing that pullback or addition or increase in short exposure, even though the ratio remains net long, that suggests that you're still at risk near term for an upside move. Now, overall, as long as you're in overbought from a grander standpoint, or as long as you're net long from a grander standpoint, sure, the broader bias remains bearish. I'm not going to fight that, Eileen. But in the near term, which is what our focus is right now, a pullback in SSI from net long is suggestive that the short side is vulnerable. Okay, that you could see a little bit of a rally. Does that make sense? Such a small nuance, such a small caveat, but I feel like if you don't take this into account, you could really lead yourself astray with SSI. It's a great tool if you know how to use it properly, let's say that. But in fact, if you go to, right here, here's the SSI for British pound. I wrote about it yesterday. And the same thing, the fact that you're seeing increase in net short exposure on building open interest suggests that the near-term risk remains for a move higher before a more dramatic turn. So, a little tidbit there on SSI. Hope that helps. Do you use SSI in a 30-minute too? Question here. Not going to lie to you, I really don't. You can. But I just don't feel like there's really so much benefit to it, Eileen. I don't really monitor it intraday. I kind of just want to see, get a quick snapshot. Are we building? Is open interest building? Is open interest waning? And is the net exposure building on the long side or the short side? That's all I want to kind of know. Trying to track it on a 30-minute or an intraday basis, it'll be tough. It'll be helpful when you see these flips. Obviously, your biggest signal in SSI is a flip from net long to net short. That's really where the most benefit or the bulk of the indicator is. A lot of times, those we'll call major turns in price. But to monitor all day as sort of an indicator for scalping, that's a stretch. Okay, so those are the setups that we've been highlighting, or that I'm looking at intraday at least. Aussie, Kiwi, Sterling, Euro, Oz, Sterling, CAD. I just want to touch base on Aussie CAD. If you guys remember this chart, I know for those of you who have been with me in the webinars here, you've seen this one before on the daily. Pretty crazy. Pretty crazy. The same slope of influence that we've been following for over 2 years at this point here from the 2014 lows. Caught the lows, essentially did get a false break and a quick run through that recovered in less than 2 days. Look where the rally is now failing. Obviously, intraday price action has been sort of sporadic. This has been compounded by some of the volatility that you've seen over the last 24 hours with Aussie and Kiwi. I guess mostly Kiwi, but on a close basis, still major key levels. 2016 open, we still haven't closed above it. We basically closed just below it yesterday by a couple of pips. Today is going to be paramount again. But look at this slope. It's the same slope. Slope is dope. Still on. Okay? And you need to close above that to really validate a much more dramatic reversal in Aussie Kiwi. Looking for 108.25 and 109.45. Near term, though, you got to see it close above that trend line. So maybe not a trade that's ready for scalp, but certainly a setup. I know that Jamie highlighted it yesterday on his swing update as well. And for me, kind of looking for initial pullback here to see where we can find some support on Aussie Key after breaking out of this multi-month descending formation late last week. Here's what it looks like on the 30-minute. Again, don't really have too many levels mapped out per se, but just kind of give you a picture of where this thing is on a basic retracement or a basic pullback. Obviously, I am looking immediately lower just on account of what we're seeing here in momentum, right? Divergence, price action making a higher high, and momentum turning sub 40 gives us near term Sorry about that, guys. Bear with me one moment. Okay. Let's work with this for now. Near-term support, bullish invalidation. Well, let me take that back. Bullish invalidation. Near-term support, I'm still going to be looking at right at the monthly open, or the weekly open, rather. That's at 106.26. But bullish invalidation, basic trendline support off the lows, 50% retracement, basically takes into 105.40. Again, topside targets 108.24 and 109.45. But watch this side. I think it's vulnerable here near term for a little bit more of a setback before moving higher. The other trade that I just want to touch on real quick is Euro CAD. From the intraday chart, really nothing to look at, but from the daily chart is coming in some interesting levels. And this is basically the only consolidation I want to look at. I might have showed you guys this last week. Still looking at the same range. Nothing's changed. But we're getting closer and closer and closer to the apex. And again, something's got to give here. So EuroCAD, just keep it in your radar chart. Keep it in focus over the next couple of days. Look, if you get a break of the monthly opening range low, objective and as basic as it gets, somewhere around like 142.70, I think this thing's going to just completely collapse. There's really not much in the way of support if you get that downside break from here. Obviously, the range top or the basic trendline resistance off the highs that you made for April, if that breaks to the upside, we'd want to tack on a quick retracement here just to give us some basic topside targets, and a basic 236 would take it essentially into 146.35. So, and again, another 350 pips to the upside, 330 pips. But the potential is there, okay? And the coiling in both momentum and in price is definitely something that has me paying attention to this, at least on a daily scale. Just keep your eyes on EuroCAD moving forward. Could you take a look at gold? Did it break support, says Mir. I don't really want to count gold as a break of support here just yet. You saw that little bit of a hold right at the monthly open, right? Remember, Mir, the bigger support for gold still is 1308 into 1303. It's going to be the high from May, a basic 38.2 retracement of the advance from that May low. Basic former median line resistance, now support. Basic trend line support off of the June lows, all stacked up right here. So initial support is at the monthly open. No, that hasn't broken yet, Mir. So you could get a little bit of a rebound. Still bearish sub 1360, looking for a move into that 1308, 1303 region of support. No change on gold. No change on gold. Says, all right. Right on, Mir. Same thing with crude. You might see another couple of days of sideways price action here in the crude trade. The levels remain unchanged as well. Here's what crude looks like. I don't necessarily think there's a play here intraday. You guys know my take on this. No change. Still bearish below the monthly open. A break below this, you're looking for a tag of basic channel support, but more importantly, this key 41.86 region of confluence Fibonacci support. The monthly open comes in right here at 48.30 and change. Again, you can see a scenario where this consolidation continues to consolidate. You get a false break to the upside and then a slam lower into some key support here. for crude, but generally speaking, you want to stay bearish below the monthly open. Also keep in mind, heading towards the end of this month into August trades, seasonalities then tend to turn kind of heavy for risk, for commodities. Um, so with that in mind, tendency still is for a move lower here. All right, that's all I have. If you have any last minute questions or trade setups you'd like to review, please feel free to throw them on the message board. If not, we will go ahead and wrap things up here. Again, we'll give you an update later tonight on the intraday page with any new updates or current updates that we're following. We'll be back tomorrow morning, obviously at 8:30 Eastern for another intraday strategy webinar. Till then, guys, best of luck trading, and we will see you tomorrow morning. Cheers.